I really like today's guest. When I started going to SBA conferences, I would see him, and he was a BDO at Fidelity Bank, which was a premier SBA lender here in the Southeast. His name is Darren Davis, and today he's president of GGL at Colony Bank, which at the time we're recording this interview was in the top 50 in the United States for 7A authorizations. Darren joins me to discuss his path from a BDO to head of the division at Fidelity. He recounts a traumatic divorce. I'm, of course, talking about when half the group left Fidelity and went over to start up Acclivity. And we discuss a controversial post Darren made on LinkedIn expressing caution about implementing Do What You Do at the same time the SBA hands out new SBLC licenses. Okay, probably not that controversial for this audience, but I love interviews like this because Darren was open and honest about his successes and failures. And those are the guests that deliver the most value to you, the audience member. So stick around. I hope you enjoy this episode of The Art of SBA Lending.
In 2020, the banking industry was forced to accelerate into the future, and now there's more innovation than ever before. And many of my colleagues are embracing these tools, and they're winning. But the banks that are slow to adapt, well, frankly, I'm concerned. Here's an example. Bank A uses Lumos and has over 1 billion data points at their fingertips that allow them to, within seconds, access all this data. Local economic data, industry insights, even a predicted expected loss. And Bank B, well, their underwriter spends hours Googling it. Which bank do you think is going to be winning 5 years from now? Guys, we can finally make credit decisions using actual data. Let Lumos take your small business lending to the next level with cutting-edge analytics by going to lumosdata.com and scheduling your demo today.
When I met you, I think it was maybe even at this conference probably is where I met you, because I came in like 2012.
Yeah, I think so.
You were with Fidelity at that time?
Yeah, that's correct.
That's what I remember, because Fidelity was a big name in the space to me at that point. You guys must have had a lot of lenders at the time or something, a team? Or
Yeah, we had a good size here. I was a BDO at the time there. So it was actually run by Danny Preston.
Okay.
And so we had trying to think, we grew pretty quickly. Back then in 2012, I remember that time frame, we were probably about 30 people at that point in time. Danny had come in right before the recession. Then I joined them in 2009. I think I was the maybe 5th or 6th lender. And then they started growing pretty quickly after that.
30, not 30 lenders.
No, 30 total people.
Okay.
There's probably 7 lenders about that time, 5, somewhere around there.
I think Joe Airy was there.
He was there.
He lived in Orlando where
Yeah.
I lived at the time. And so I remember it from there. If I remember correctly, there was a lot of real estate.
It was pretty much all real estate is all we did.
Gas stations.
It was mostly hotels, gas stations, special purpose stuff.
Yep.
For the most part. We were doing a little bit of 504s, but it was mostly 7As. So we were also doing USDA, was why I came over to Fidelity to begin with. So that was probably about 20 million of USDA a year back then.
Wow. Well, I just remember them being like a kind of a predominant kind of thing in this market, like in the Southeast. That's sort correct. Of. Are they still around?
No. So in, I guess it was July 19, they were bought by Ameris Bank, which is another big bank here. So they merged. They're about, I'm not sure what size they are now, but at the time, I think it was about $17 billion bank. Fidelity was about 5, and I think Ameris was about 12 at the time. So
okay. And were you still there at that point?
For one day. So, I had decided it wasn't a good spot for me. And I actually was named the GGL president at the time, or manager, director, whatever they called it back then. But decided I wanted different opportunities and found Colony Bank shortly before that. So
interesting. So how did you get from, you said you were a BDO at the time when you came there, to then being named president of GGL? What was that like trajectory? Yeah.
So kind of what happened there was there was a group that left back in July of, what year was that? 2015. So, there was an opportunity either to go with them, or I was given the opportunity to take over the group back then. That was a big challenge, to be honest with you, because we were a pretty close-knit group, and now about 12, 14 people left. And we were, it was bad, kind of a bad divorce type of thing. So it was really tough. I mean, I've also built from scratch. I think this was tougher than that, just because a lot of morale issues. The people that weren't asked to leave were like, what's wrong with me? Why am I still here? Why wasn't I asked to go with, the other group and so forth? So that was a challenging time to kind of rebuild that and get the morale back up again. But it was also fun at the same time.
Why did you want to go more into management? Like, isn't BDO the best job in the world?
It was. Actually, before I joined Fidelity, I actually started another SBA group there. Anyway, opportunity came up. The bank I was at was in C&D, so joined Fidelity and became a BDO. I was like, I don't want to do anything else for a while. This is exactly what I want to do. But I actually got bored. So I needed a new challenge. I needed something different. And it kind of came out of the blue, to be honest with you. I wasn't expecting it. I was actually on bed rest from a knee surgery. And the CEO of the bank came and picked me up at my house to take me down to our office in Covington to make the announcement. So, I wasn't expecting it. It was out of the blue. But, I was just bored. I needed something different to do. So
what was that like then, switching from a BDO at a shop to then management in that shop?
It was a long learning curve. I made a lot of mistakes at the very beginning. One of the first things I wanted to do was the heads of our functional groups, the head closer, the head underwriter, they all left. So it was like, all right, let's bring stability to the group. And, I quickly named people for the positions. I hit most of them very well. One of them I did not hit very well. And what I learned from that was I should have been asking around a little bit more, and then instead of making a decision all by myself. Mm-hmm. And so that was my first learning experience. My second really was just transitioning from the BDO, from like doing things instead of having the answers to having the questions to ask, and really coaching people instead of giving people the answers and so forth. It kind of brought me back to my original days when I first started here, started in SBA lending. Worked for CDC and green out of college, didn't know anything. And didn't like the boss at the time, but in the long run, it really paid off. Anytime I asked him a question, he's like, it's in the SOP. So back then, it was all paper. We had to go through, mark it with yellow stickies to remember where it was, but it really taught me, how to learn and also to figure it out myself. And I had to transition from, the BDO role of having the answers to kind of being mean a little bit, I guess, and forcing people to learn on their own.
And that's 100% correct. Isn't it amazing how you can look back at 5 years at yourself and look at how much you didn't know, but how much you maybe thought you knew at the time?
Yeah, definitely. Every day, I realize, I don't know as much as I think I know. And also every day I realize that there's smart people and very capable people who have great ideas that work for me that I need to listen to as well, that I don't have all the answers. And a lot of times I don't like the answers, but they're the best ones. And I got to realize that for myself too as well, that, hey, I might have a preconception of what it should be or what we should be doing, but someone else might have a better idea. And I got to just let go and listen to them and move forward with that solution instead.
It's no secret that most entrepreneurs are busy, and getting them to focus on their underwriting checklist is a full-time job. So when it comes to the business plan, projections, and assumptions, I'm a huge proponent of bringing in an expert. Rapid Business Plans is a trusted partner to small business lenders and their borrowers. They make it easy for entrepreneurs to tell their story in a format bankers love. Their team goes the extra mile to ensure everything is done fast and done right. And they're all based here in the US with employees across 4 different time zones. They just completed an export business plan for one of my borrowers, and they were super happy. We got their CRE expansion loan approved, and now they can move forward in their business with a clear plan. Rapid also offers feasibility studies, which I highly recommend for any independent startup loan. So go to rapidbusinessplans.com for more information and set up your Get Acquainted call today. I'll leave a link in the show notes below.
So you went over to Colony after the Fidelity thing, and did they have any sort of SBA program at the time?
Not really. So Colony basically prior to the recession, they had an in-house, like one person doing SBA lending, like didn't make their conventional standards, they'd go SBA. Then that person left and started an LSP. And basically what he was their LSP for a while. So they had an LSP model. And so they really didn't have any organized group at all. And so we came in and kind of they had their PLP license, which was great. So that made it easy, but they didn't have any processes in place. And it really came from the CEO at Colony. He had just started about a year before. And one of his goals was to bring in some complementary lines of businesses. He brought in mortgage, and then he was, looking at, we're either going to get an SBA full force or we're going to get out. And the opportunity just came up that we were able to find that opportunity and kind of build it from scratch. And what was nice there was Heath Fountain, who's the CEO, really believed in bringing in top talent, let them loose, and just giving them the freedom to do what they need to do, but also hold them accountable at the same point in time.
What did you learn from the Fidelity experience that you brought with you to Colony?
A couple of things. What I realized, even prior to COVID, was that work from home was really important to get the top talent here across SBA, just because the difficulty in Atlanta was we were not only competing with other Atlanta-based lenders, but also national lenders who are allowing people work from home. So that was one very key thing. Another was, just getting the right people in and making sure culture fit is important. And that it's not all about production and the best people. It's really about personality, culture fit, and can you get along with them? And not just about performance.
Yeah, well, that seems to be a common thread in the discussions we've had today and throughout. We're in the people business.
Right.
But, when you go to a bank, first of all, when someone like you, when Darren moves to a shop, you've got to make sure you're making the right move. And when you're the guy running the division, it's either going to work or it's not. How do you know the bank is serious about SBA?
It's scary because I talked to different banks throughout my career, and it's really making sure they understand the risk reward model of SBA lending. So they might not understand the rules and regulations, and that was a lot of conversation I had with the bank before making that decision. Is I knew they did some SBA, so they understood it a little bit, but do they really understand, enough to be able to grow this to the next level? Because they were doing about 3 to 5 loans a year. It was all in footprint. It was based off relationships. We do our loans off relationships, but they're also very transactional at the same point in time. So it's really getting an understanding of, hey, are you comfortable with airballs? Are you where's your debt service requirements? What's your, looking at their credit box, making sure they understand what our deals look like.
Yes.
Because we know a lot of banks hear about the premiums and all the money they can make, and they see the deal comes in like, oh, whoa, wait a minute. That's not the type of deal I want to do. So there's a lot of talk about, what we are looking for. And, we went through kind of high level guidelines of what we will and won't do before, we made that decision.
How do you balance them being, the bank executives being like, well, we're running the bank, we want to do this, but we hired you for your knowledge. But sometimes is there like a little tension there?
The biggest thing I think is we're a self-contained unit in the bank. So sometimes our priorities are different than what the banks are. And it's just really talking. We have a great culture where, we can speak up. If something's in conflict, we talk through it. They're good listeners on that. There's always going to be that. And the nice thing is they listen. So there's sometimes tensions, but there's also listening, and they hear. Sometimes, we have to give, and sometimes they give. So it's a really good working relationship from that perspective.
When you went to build this program, was there anything where you were like, I want to do this a little bit different when I come in here and build it?
Actually, I wanted really the opportunity to grow into different products and try different things. So, my previous positions, it was kind of like status quo. This is how you do it. I wanted to, I wouldn't say anything in particular. I just wanted the ability to be able to do that. One thing we did recently was just a small balance working capital loans. I know a lot of people are doing that, but we started that about a year ago. So that was something they kind of gave us, they're like, hey, go for it. Let's try it out. If it's, and we'll monitor it. They're very good. They're not scared about failing. So, which is great. They believe, hey, failure, we'll figure out what's wrong. We'll fix it. And we'll keep moving forward. So it was really about the culture I was looking for more than a specific opportunity or something to look at. And the culture there at Colony is just one where it's about growth and not status quo, but always change. So, which has been great.
Well, you're doing an incredible job, because I looked at the rankings as of January 31, which are a little old, but you were number 49 in the country out of 1,048 or something like that, which probably puts you in the top 2%. What's the secret sauce?
The secret sauce is just really getting a platform that has, the right talent there, and getting teamwork, really. I mean, it's really about teamwork. And
well, how do you get the right talent? Let's start there.
We have a very thorough interview process. It's probably more than most people do. So, our process is we want to get to know you and you get to know us. So, we're very transparent. We're open to what's good, what's bad, what we're working on. We also have our candidates are given, access to whoever they want to talk to. So we'll have, whether it's me who starts off the conversation, our national sales manager, director of operations, our credit administrator. So they get to talk to every kind of single point in the process, especially for a BDO. For a BDO, they want to know what deals can I get done and will they close, right? So we let them talk to all the people in charge of that. We also fly them here to Atlanta to meet the closers and processors. If they want to talk directly to an underwriter over through a Google Meets or Zoom, we'll set that up. So that's one key to it. The second key is just a culture fit too, as well. I mean, it's like I said, it's not all about producing. Sometimes a lower producer with a better fit's going to be more successful here. So, and then just getting understanding what's going to work and not going to work, make sure they're comfortable that they can be successful here. And we also agree that they can be as well.
Well, and your average loan's actually small, relatively speaking, like the 230 or something.
Yeah,
like that?
It's dropped. And this year, the last 3 months, it's dropped of our small balance. We were averaging about $1 million probably in 2020 and 2021. It dropped a little in 2022 when we started this program. And then this year, just really that's exploded more, what we call our core side. A little bit slower first quarter, which we were expecting, but it's picking up now. So we expect that average size to increase here.
So what is the small loan program that you're doing?
So it's a working capital loan program up to $150,000. Oh. So really took advantage of the SBA rule changes back in August, and credit scoring model. I know other lenders are doing that as well.
That's awesome. And have you found that to be working for you?
It is. I mean, so far, it's pretty early to know exactly how we modeled if the loss ratio is going to turn off, credit quality is going to turn off that way. But so far, we've had, I don't remember exactly the number of loans that we've done total, but we've had 3 loans go bad right now. So we're still monitoring that. It's still early to see. But, I think our credit criteria is set up that hopefully, it will be less than what we even modeled.
3 out of like a few hundred probably?
We've probably done 300 and something in it. So it's probably 3 right now.
Yeah. So that's not bad at all. So is there a question that you always ask, let's say a BDO, because you were a BDO.
Yeah.
So when you're interviewing these BDOs, you're like, I know, your side of it. Like, is there a question you ask to try to weed people out?
A couple of things. It's interesting. Always hearing about their loan volume, and then obviously going like you did, check the Nagel numbers. What's that bank actually doing?
Right. So, I do that all the time, and it's like, wait a minute.
Yeah.
Something's not adding up here.
And it's not. And the other thing I look for is hearing someone, well, I referred all these deals out because I couldn't get it done at my shop. So my question to myself when I hear that is, do you understand what you're supposed to be originating at your shop or not?
Exactly.
So, so if you're originating somewhere else, and then my second follow-up is, well, if you refer all these deals out, I know I didn't get any of those deals. Why aren't you talking to the banks that you referred them out to?
So that's a good point. Yeah, I think I'm pretty hard on a BDO that wants, I'm like, why are you leaving? Right?
Yeah,
like, because
that's a good question too.
Why did you go there? Right? Like, did you not vet them? And so there's very few answers that I'm comfortable with. I feel like, well, they just shifted the credit box totally different. And I don't feel like pivoting and getting all new referral sources. Fine, reasonable. Yeah. Umquad did that. Are we allowed to say names? Yeah, it's my podcast. So, they shifted their credit box. Everyone left. Sometimes someone changes the comp plan up. where it cuts your income in half. Like, okay, I get that. But so many other things you have to really dig in and talk deals and
absolutely. It's also, knowing people in the industry and asking around too as well. So that's, I try to find someone might know him or her. That's big, but also look in the resume when you see someone at 2 years at a shop, 3 or 4 shops in a row, and they have the same excuse, not vetting someone properly. I'll give them, one mistake at that. Right. But when they say they've done that multiple times, it's,
right.
You're not learning.
Right.
So I just think that, that's a bad sign.
Yeah. What's your biggest pet peeve for a BDO?
That's a good question. I think my biggest pet peeve with a BDO is just not setting the proper expectations, not being able to tell the person what they need to hear to get the deal done instead of telling them what, they want to hear.
Yeah, I understand. One time we did an episode where I asked, I think of 7 ops managers and closing managers said, what's a piece of advice you would give a BDO or something like that? And I was going to do an episode about like, here's 7 tips for BDOs from your ops manager. But all 7 had the same answer, and it was that.
No, it is. It's about setting expectations. Our world of SBA, it's ups and downs, bumps in the road. The deals are SBA for a reason. And, we got to make sure that, number one, set the expectations up front, but also those expectations can change because something comes up, and we have to be able to communicate well throughout the process to make sure the borrower understands, I know I told you this from the beginning, but this came up and now this is going to happen. So
when you were leaving production and going into management, did how you look at credits change?
Actually, no, I think I was pretty consistent as a BDO. From my perspective as a BDO, I came from a credit underwriting background when I first started in the industry. So I don't think I've changed based off my role, maybe based off times and learning things, but I don't think the role changed at all.
Right.
So.
Yeah, that makes sense. So, we're at this conference in Asheville, and what do you think the vibe of this conference is?
Well, definitely with the get your groove on. It's been I guess it seems like people are having a good time is what it looks like. I think people are still trying to get answers from SBA about what's going on with the changes they implemented. And I think everybody's learning some new stuff, but there's still a lot of unanswered questions out there. And but I think it seems like people are more positive now than what they were back in August when all these new rules came out.
We've accepted it.
Yeah, I think people are accepting it and realize they now, when you first heard about people complaining about it and hating it, and now you're hearing about people, how am I going to figure this out? What do I need to do?
Right.
So I think the mentality's changed a lot.
I think some of us were holding on to like, they can't possibly go through with this, right? We're
exactly.
going to repeal this one, right?
No doubt.
Even you made a post back then on LinkedIn, which you rarely do.
Very rarely on LinkedIn. So you make up for me. So
I do enough for everyone, right? But it was a good point, and it was an obvious point, but I hadn't heard it be made yet. But it was essentially, how are we going to do what you do at the same time we're printing new non-bank licenses? So these non-banks can come in and just create their own policies, and maybe they have never done an SBA loan.
Right.
And you had some concerns over that.
I definitely do. I always think of the government, it's supposed to be a similar playing field for everybody, right? Everyone should have, whether, I know everyone's credit boxes are different and what types of deals they do, but if I go to bank A and non-bank lender B and they require, I know this doesn't matter as much anymore, but this would come to my head, a personal residence at the bank, but the other one doesn't. Is that fair? I think it's creating some unequal competition, which I don't think the government should have a part of that. They should make an even playing field across the board. And obviously banks can decide, what credits I want to do, but the rules should be the same for everybody. So.
Well, I was in a policies and procedures riveting session. It was actually good. 41-page slide on do what you do. And I'm just like, how are you doing all this? Like you, as someone in charge of the division, like it's your responsibility to make sure you have, your policies and procedures in place, but it kind of starts now with a conventional policy.
I mean, the nice thing is I have a good relationship with our chief credit officer and our senior credit officer. So we talk, we have meetings every 2 weeks, and they're very good with making the necessary changes we need to for loan policy and so forth. So it's actually been easy. I know at some banks you have to go through a whole plethora of approvals to get something changed on loan policy. Luckily with us, it's kind of unilateral with our chief credit officer. If he agrees with it, we can make those changes. So it hasn't been too bad. It's just a matter of kind of realizing, what we're missing and getting that in as quick as possible.
Right,
So,
exactly. Well, it's you need a team. I mean, you need a dedicated team, I feel like, which I don't know how you would do it at a small shop.
No, I agree. I mean, and it's not that my recommendations. I shouldn't say that's our team's recommendations. I'm just the one conveying it over to our chief credit officer. So, I mean, it's a big team effort. I mean, luckily we have a great group of people who take their job seriously. They want to do the right thing. And when we come up with something that doesn't make sense or it's missing, it gets escalated up to the top, up to me pretty quickly. So we're able to rectify the situation.
There was no time for questions in ours, but I had a lot.
Neither in mine either, so it's the same.
There was one positive. I took away like this, I'm just trying, my questions are like, why? And do we like this? And are we keeping this? But there was one positive thing, but now I don't think overall, were these changes positive or negative? Like, I don't know. But the positive thing was equity injection. I do like that they give you some wiggle room for equity injection. We don't have to maybe go down the rabbit hole
Exactly.
chasing little, $10,000 deposits or whatever. But also now that there is no equity injection, so if you are a non-bank lender, you can write your policy of, we'll just do the bare minimum or nothing,
Right.
essentially, which is definitely not prudent. But I definitely like that change. Everything else, I feel like I'm kind of just having to relearn everything from scratch, and it's harder for me.
No, I think it's harder for everybody. Like I said, when I first started, I had to learn the SOP. It didn't change I started in 98. It didn't materially change for many years. So I knew it like the back of my hand. Now, I don't know it as well, but also in my position, I don't think I need to be the one an expert at it. There's other people that are there to do that. So I rely on them more than me to know that at this point in time, because I need to be more focused on the people and the strategy side of thing, and have faith, which I completely do, in our managers on that side, and also just the people in the day-to-day weeds who are learning it, who are at the conference or are on the training things. So I don't know as well as I used to, and which is probably a good thing now, because now I don't stick my head in anymore and let people answer it instead of me being the answer. So that's kind of helped me to stay out of the nitty gritty.
Now you're saying, what's the SOP say? Because you don't know.
Yeah, exactly. So
no, well, that was the big, do what you do was the big change. And then the SBA approval numbers or the SBA approval process was another big change, right? We don't have PLP anymore.
No, I know you mentioned, it's a great point. I think it's a great point. It's like, the compliance check now, it takes at least 24 hours to get a PLP number if you're lucky. But it's good and bad, I think. It's good because there's a double check, but it's also been bad because we got a lot of false positives and having to work through that.
Yeah.
So.
And when you're doing the smaller loans, you're churning out more units to get your number.
Yeah.
You have a higher chance of hitting those.
We definitely do. I tell you, the good thing about it is we've seen every one of them now. So we know which ones to expect. And obviously the death to deals of 4363.
Yeah.
So, but what's amazing with that is they won't give us, we don't know what's going on with it. Sometimes a borrower, they can't even disclose the borrower what's going on. And our customers are yelling at us.
That one's crazy.
So that, what do we say? Hey, we can't do anything about it. We wish we could help.
Somebody just texted me today. I got my first 4363. I was like, you've been dodging raindrops, first of all, since.
They're lucky.
I got 3, right away. Like literally I could have pulled the PLP. Not that I could have, but like we could have possibly pulled the PLP one day earlier.
It would have been fine.
And then, overnight they change it. And all of a sudden, oh, you forgot to send a tax transcript on an affiliate or something. And it's like, you're somehow banned.
I know, it's crazy. You don't know why. So
yeah. And it's like 60 days later. What else? Just as overall with these changes, like, what do you think the impact's going to be on the industry long term?
It depends on the players, right? I mean, how are lenders going to respond? Are they going to drop down to the bare minimum and push through deals that just shouldn't be pushed through? Or are they people who are going to be in here for the long run that really care about the program? I mean, who knows? I don't know.
Well, someone's going to go to the edge.
Yeah, someone's going to go to the edge. I mean, the question is how much volume are they going to do and how bad are they going to affect us?
Right.
That's my concern. Fintechs getting involved. I mean, if they're pumping out huge numbers, what deals are they going to be sending the SBA that maybe they were doing before, maybe they weren't doing before? So
I think it's going to happen. I think,
But I also think SBA is doing a pretty good job of monitoring that right now. As far as, the growth and everything, I mean, we've been through it. I mean, we went through, we're doing 3 to 5 loans a year, and then we shot up. That was, right after COVID when 90% was out, we shot up to 100 million. And so we got an audit right away.
Mm-hmm.
So, which I think was great. I mean, I think that's welcome for us to show that we're doing the right things. But hopefully they're going to be doing the same with these new non-bank lenders. The question is when are they going to get their PLP status? How quickly can they get that? And I don't know the answer to that one.
How big do you guys want to get?
Our goal isn't to be a number one SBA lender in the country. Really, our goal has been to be the employer of choice for SBA professionals and the bank of choice for small businesses looking for government guaranteed loans. And, from a size perspective, I would say anywhere from 175 to 250 million, somewhere in that neighborhood. But it also depends on the growth of the bank too, as well. So, I mean, we're trying to grow with the bank. Right now, the bank's about $3 billion. I know we don't want to be too much of the bank and we don't want to be too little. So it's kind of managing both sides of the equation there.
Yeah. Okay. What do you think about the market today? Because I'm looking at it, I'm seeing a lot of consolidation. I'm seeing a lot of, obviously, bank mergers and stuff. Shops are also closing down left and right. And there's these players at the top of the rankings that seem to be getting bigger and bigger. I think we got 3 shops that are $1 billion players now. Do you find it hard to compete?
Well, I wouldn't say it's hard to compete. I think the demand out there is less than what it was before because obviously rates are up really high. And the deals that are out there are pretty tough. And there's less good deals out there right now. So I think there's more competition on the good deals. But I also think it's about finding your niche and, really differentiating yourselves on different types of deals instead of just saying, hey, I'll do anything. So, we're working through, obviously we got the small balance working capital loans, we do construction deals. So there's other things we're trying to do to kind of differentiate ourselves from others. But it's also, I think there's a changing landscape because these banks are seeing the changes to this, under 500,000 do what you do. It seems like the larger banks are really embracing that right now.
Yes.
With what you're hearing with the layoffs at some of the bigger national banks. But also I think another thing we're seeing too is during the 90%, what was that, 2021 and 2022, demand for SBA professionals was skyrocketed.
Right.
And what people were paying, salaries and all the other stuff, was not sustainable. I mean, premiums were out, best we've seen, right, that I can remember in my career.
Yep.
And then all of a sudden now we kind of flipped to the other direction, maybe not the worst, but on the lower side, and the numbers aren't working. I mean,
exactly.
If you ramped up and were paying exorbitant, salaries and bonuses to all these people, you're not making as much money.
That's what we've been talking about. Yeah. And that's why a lot of these shops are folding because salaries are up. Dustin sat on here earlier and said from 19 to now, salaries and wages are up 40% or something crazy like that. I don't know. His partner said 10 or 20% the other day when I talked. But we all agree it's up, which, is great for people. But not if it means their departments are not sustaining.
Right.
And so, then you don't have a job, right? So you couple that increased wage salary expense, which is the largest expense, right, with the premiums coming back down to reality, and they're still probably a little low, but they're kind of stabilizing. You're getting squeezed.
Yeah, I agree. I think that's why with these larger national banks and even some regional banks, you're going to see more of a shift to smaller dollar size since they can leverage the less expensive commercial people to do most of the work and not pay the expertise you need for a normal SBA underwriter for the larger size deals. So I think we're going to start seeing a shift, and obviously that was probably SBA's intention.
Right.
So, but I think there's that then provides opportunity for the smaller banks or non-bank lenders or whoever to focus on the larger deals. And I think there's going to be, a shift.
That's interesting. Yeah, that makes sense. And they can also leverage technology on those smaller ones a lot easier.
Yeah, I mean, I think technology is important no matter what size deal it is. Now, I don't think it replaces people's jobs by any means, because we still need to have that relationship. I mean, I don't care how smart a technology is going to be. It's not going to be able to tell you if it's eligible or not eligible and fully underwrite a deal to look at everything. At least not now. Maybe AI sometime in the future. But
I don't know, man. I think we might be close. I don't know.
We might be, but I still think that human touch interaction is very important through the process. I mean, I think you need to balance the two of them. Technology needs to get rid of, will help get rid of the mundane kind of tasks that can be, automated, but you still need a person to talk to, a person to deal with, whether it's a BDO, an underwriter, a closer. I think you're still going to need that. And it might be, the efficiencies of those people skyrocket, so you don't need as many of them, but you're still going to need those positions.
On a transaction specifically, partner buyout, change of ownership, real estate purchase, no one wants to, get the loan from the robot. Like, we're, as a BDO, remember, you remember back when you were a BDO, right?
Absolutely.
You are not just there to process a loan. I mean, you're weighing in, you're giving advice. You're saying, no, you should structure it like this.
Right.
And sometimes you're, a therapist and, a sounding board.
Absolutely.
And you're all these things that technology is never going to be.
Absolutely. I mean, it's going to change it to, a consultative approach, right? You're not going to be, the number crunching and so forth. That's going to be somewhere else. It's going to be more the qualitative side of things. And, you're going to need to be working with the customer, like you said, to be their therapist or psychologist or whatever it is at the time to help them through the process. But you're still going to need those support people, the underwriter and processor, closers, to deal with that. Technology is just going to make it easier. It's not going to replace anybody.
I mean, we're a pretty old industry. We're pretty slow to adapt. So how are you leveraging technology at your shop?
So, I mean, we're leveraging technology across, the whole origination process. And just really utilizing it to help us be more efficient in processing, but it's also to create transparency with the customer so they know what's going on with the deal, make it a little bit easier for them to, complete forms. I mean, right now, old school way, although they've simplified the 1919, you still got to put your name in it several times, still got to put your address in several times, and also to make it easier for us internally, because we all know the 1919, when it comes in the door, it gets changed how many times throughout the process.
Right.
So now we just, keep it digitized till we need to print it off and get it signed through DocuSign. So it's important, but the nice thing we have too is the bank's really technology focused right now. So they're trying to build a middleware system where we can connect all the different systems into, core, and they can talk to each other, which is difficult, because I know in the SBA world, we're sometimes the redheaded stepchild, right? Mm-hmm. And so whatever technology gets in on the other side of the bank, it kind of gets forced on the SBA side.
Right.
It's not necessarily the best solution for SBA, but it's tough to convince them to spend more money on something else, or that it doesn't connect with the rest of the bank. But luckily our bank's taken that attitude of, we have all these different complementary lines and understand they need different technology to be successful. So it's made it a little bit easier for us to get the right technology in, so we can be successful with it.
Well, that's awesome. And that's super smart with it's these little things that just can make, like the 1919, that can just carve out a little bit of efficiency, and you do enough of those and then build up to actually have a really big impact on it.
No, absolutely. I mean, that's just a small example. I mean, that's the biggest one we talk about, especially on audits. How many times is the 1919 picked out for some reason? And especially from the customer experience, they don't have to redo a form, or we don't have to redo it internally for them 3 or 4 times. So, that's just a good, simple example, but there's plenty of other examples besides that one that's helped out with.
Good, man. Well, I'll keep watching you, and I appreciate you coming on, and you're doing great things, man. So thank you.
No, I appreciate having me. It's great. So thank you very much.
Cool.
All right, that's it for this week. Don't forget to subscribe to the podcast so you never miss an episode of The Art of SBA Lending. And if you have any feedback or suggestions, email me at ray@artofsba.com. Until next time, ta-ta.